Are you concerned about climate change or animal welfare? Would you like to see companies promoting more women in the workplace? Whether you care about those issues or others, there's likely an ESG or SRI investment fund for you. And you're not alone either. A growing number of investors want to see their money go towards funds that are both profitable and reflective of their social values. Bloomberg Professional Services predicts that global ESG assets are on track to exceed $53 trillion by 2025, representing more than a third of the $140.5 trillion in projected total assets under management. Hi, I'm John Coldrick. After watching this video, you'll have a better understanding of what ESG and SRI investment funds are. If these funds interest you and you live in Canada, reach out to me and we'll discuss how we can add these funds to your financial independence portfolio. What is ESG? ESG stands for Environmental, Social, and Governance. Sustainable investing is another way of describing ESG funds. Environmental encompasses the conservation and protection of the natural environment. This includes factors such as energy consumption, pollution, climate change, waste management and water quality, and animal welfare. Social encompasses relationships with employees, suppliers, clients, and communities. This includes factors such as human rights, including child and forced labor, labor standards and employee relations, health and safety, equal employment opportunities, education, and housing services. Governance encompasses standards for company leadership, risk controls, and shareholder rights. Factors include ethical business practices, quality of management, board independence and diversity, conflicts of interest, executive compensation, tax transparency and disclosure, lobbying, political contributions, and shareholder rights. Investments with good ESG scores have the potential to drive returns, while those with poor ESG scores may inhibit returns. ESG looks at the company's environmental, social, and governance practices alongside more traditional financial measures. Remember, while there is an overlay of social consciousness, the main objective of ESG valuation remains financial performance. What are SRI funds? The socially responsible investment movement has been around longer than ESG and goes one step further than ESG by actively eliminating or selecting investments based on ethical guidelines, which can range from personal values, religion, or political beliefs. Examples would include refraining from investing in tobacco, gambling, or firearms industries. For example, an investor may wish to avoid any fund that invests in companies engaged in firearm production because they hold anti-conflict beliefs. Alternatively, an investor may opt to allocate a fixed portion of their portfolio to companies that contribute to charitable causes. For clients engaged in socially responsible investing, making a profit is still important, but must be balanced against principles. The goal is to generate returns without violating one's social conscience. ESG, on the other hand, places a stronger focus on the factors which have financial relevance. The distinction is important because ESG investing requires consideration of how a company's adherence to ESG standards affects its performance on the market. The theory is ESG-friendly companies won't just make you feel better, they'll perform better too, thanks to benefits such as cost savings from energy efficiency or better management driven by more diverse leadership. A growing number of investors want to see their money go towards funds that are both profitable and reflective of their social values. In summary, ESG looks at the company's environmental, social, and governance practices alongside more traditional financial measures. Socially responsible investing involves actively removing or choosing investments based on specific ethical guidelines. A growing number of investors want to see their money go towards funds that are both profitable and reflective of their social values. If you live in Canada and are interested in learning more about investing in these funds, contact me using this email address for a free consultation. You can also find my email address in the description box below. These funds can go into registered accounts such as RRSPs and TFSAs, as well as non-registered investment funds too. Remember, the best time to invest was yesterday. The second best time is today.